Welcome to TradeTheMBI.com. This is John. This report is for the 31st. Well, yesterday was fairly simple. Above the 50% was a long setup, and then it began to fade. And you can see that clearly here from MBI readings. We had the white leading, so we were already in the relative downturn. But we had a move of the magenta over yellow, and that gave a little bit of support. Combine that with steel rising, that was enough to give it brief respite from the decline. And we came down to the 38% here, and you can see in pre-market it's already started to rise back up. And you're likely to see that, but the shakeout is still very negative. And when combine that with the positive readings from the extreme, you're just going to get some back and forth at this particular stage, and it's slightly bullish. I would expect they're going to attempt to move back up to the previous start of the extreme, right around that 55-60 range. So that's generally what to look for. It becomes very easy in this particular case. At this point, we're just above the 50% in pre-market. Below that is negative, and above it definitely can be a nice little ride to the upside. Really still looking for a strong crossover of magenta, which is what, 1552, 56 now to 70, so it's right at that precipice, but those are current readings. That isn't a finish on the day yet. So that'll be worth watching. And of course, intraday, we're going to see it much clearer. It was pretty straightforward what we saw the other day and played out pretty cleanly right through it. From an NQ standpoint, a little bit stronger because you can see it's already made that crossover. But before, it was still pretty weak, and that's why we broke through the 23%, came down. For the NQ, again, 23% below that definitely is short range. You can still see the shakeout pretty negative, as well as the DOC. And so we're in that minus 20 category area where you get an automatic sort of bounce back, sort of that dead cat bounce is, I think, the term that everyone loves to use. You don't hear those things very often, but it's what it's looking like at this particular stage, unless there's some major positive news. Of course, treasuries, that's a positive because as that yield continues to decline and everyone flows in there, the market is the only place where you're going to get any yield. So it sort of becomes a de facto sort of push towards being in equities versus on the sidelines. But if you have a negative view of the economy and maybe that's starting to grow a little bit, well, then it's not such a positive for the market. That causes a little bit of a degrading in overall excitement. And we'll see at the beginning of the month here because we'll have new fund money coming in, and where that wants to allocate itself will be an interesting setup. Of course, if they believe or actually know that the Fed is going to reduce rates, then being in the treasuries where they are not such a horrible thing, but the Fed would have to go a long way for it to be reasonable given what inflation is running at. And of course, oil dipping down, big help. Can it sustain that and stay down here? We'll see. But the bigger concern is whether that's a decline based on the fact that there's just too much supply. And if that's the case, that's a reduction in economic activity. Not a great thing. From the EU area, well, disaster in general, but overall, they're maintaining this between 110 106 range, which is enough to keep things afloat. And as long as they're able to do that, then they stave off the inevitable banking failures that take place within the EU. From a gold standpoint, as we've said, it's going to continue to rise. There's no stopping it. It's not even worth commenting. It's not about being a gold bug or anything. It's about understanding the dynamics of what exists right now. And between gold and your cryptos, those are the asset classes that are going to have the most sustainability going forward, simply because of the way this situation is. And there's just no way getting around the debt compiling and that. You just can't pretend, and you just have to go back and look at the early 70s and that. And we haven't even had any major political shocks like major conflict or anything like that. You could argue the Russia thing is something that's limited, but if it starts to escalate, like you had the OPEC embargo and stuff in the early 70s, those are the things that really accelerated inflation and created a spiral that, was a negative for the market for almost a decade. From an ETH standpoint, still slightly near that 50% weak relative to Bitcoin at this particular stage. I think you're going to see that back and forth. So the other day I was telling you that with the positive extreme, not positive extreme, but the rise of the MBI white spike here at the peak was going to call for a move back towards the zero, and then a break of that 50% would definitely be a result to the 0% line. And sure enough, that happened pretty quick. So it was a pretty easy read. Didn't take much thought. The turnaround on it pretty strong. You ended up creating a nice little compressed double bottom, so to speak, within these lows. They like this level right around this 54.30 seems to have some serious interest. They keep buying that move at that particular stage. So that looks like the safety net at this point. So I would be very alarmed if that breaks, because then you're looking at a much swifter decline from that level. Still haven't been able to get past the move back up to 50% of the original move lower. So that becomes your peak one. Is that around 55.35 range? Above that definitely would be an excitement for the market and certainly spur a lot of buying. And I think that's what they're pushing for right now, is to get back to those highs at this particular stage. We'll see. They might get there. Certainly, shorts have been beaten up for quite some time. So, when they get these little bursts, they just go ahead and take their profits, because they really aren't certain that there's going to be a sustained move. And that's enough for bulls to then get additional buying. When they start covering, they add to it, and it just compounds real quickly. But if it's scared buying, then it just doesn't really have much impact, and then you just fade back down again. So you can see from the early morning pre-market, we were moving higher, and it didn't take long. Right at the open, literally things started cascading, and then it just got worse and worse and worse. And then there was the buildup and set up towards pre-earnings, and then boom, declare right at the close, dipping down, clearing out any stops. And again, this becomes an option situation. You have all the put buyers, they get killed with the early rise by call buyers. Those call buyers, those forced out of the puts, then it flips back down again, and they start over in the pre-market, where you can't get a hold of them and bring it back up. So that's where we're at this particular stage. All clean. You can look for new indicators coming out at the close today, and we'll begin it for a new month, and I think the excitement continues. I think that we might see just a little bit of a decline in our volatility, but what a great month. Our expectation for really strong volatility, that was so right on, and it was pretty clear within what we were seeing from the readings. Hasn't really abated too much yet, but it just seems to be a natural inclination that things will start to moderate. But it's a political year, and when you have election years, things change. So we'll keep an eye out and just keep following the readings. As always, trade well. Anything relevant, I'll put it in the Skype chat. Have a good one.